Oh, good morning, ladies and gentlemen. It is Monday, February 7th, 2022, and I'm Kenny Bolkar, your host of the party. And what's going on this week? Oh, there's going to be a lot going on. We're going to get great inflationary numbers, or inflationary numbers. You can call them great or not so great, but that's happening on Wednesday, and that's going to drive much of the action as we enter the end of the earnings season, right? This really being the final week. We're going to get some great reports, but we'll talk about that. So let's talk about what's happening and what it is you need to know. Kind of recap quickly what happened on Friday, because Friday was significant, and then what we have looked forward to. Look, Amazon saved the day on Friday. Traders and algos took it up 13% after that blowout earnings report. But be careful how you think about that. Oil trades as high as $93.15 a barrel before settling down. 10-year treasuries yields, they pierced 1.93%, sending shivers through the markets before it settled down. Bank of America over the weekend came out and reiterated its calls for 7 rate hikes in 2022, and the cryptos are raising their heads again. And what are we having for dinner? We're going to have the grilled ribeye with a Gorgonzola cream sauce. So delicious. Okay, look, stocks put in this mixed performance on Friday, right? Acting erratically as investors search for clarity, sending stocks lower, then higher, then lower, then higher again. The 10-year treasuries contributing to the gains by rising as high as 1.9%, 93%, up from Thursday's close of 1.83% before closing with a yield at 1.9%. Amazon, which was up 13%, reported blowout numbers on Thursday evening, helping to settle the mood in some of the FANGs after the disaster known as Meta destroyed billions of dollars of wealth the day before. By the end of the day, the Dow lost 20 points, the S&P gained 23 points, and NASDAQ advanced by 220 points, of which you can thank Amazon. The Russell added 11 points, and the transports lost 255 points. On a side note, there was all kinds of commentary and fascination on Friday about the 13% gain in Amazon, as if that was a surprise. Look, the Facebook disaster took the tech names down big on Thursday in a sympathy trade, right? Amazon lost 8% of its value for no reason other than it was one of the FANGs. And then when they reported on Thursday evening, it was clear that they didn't have the same issues as Facebook. In fact, they had none of those issues. So the ridiculousness of the sellers was met with a strong buy reaction, which took back the lost 8% from Thursday and added another 5%. And that's what makes sense. Because had they not beaten Amazon up on Thursday, it would not have rallied 13% on Friday, gavish? All investors did was correct the mistake from Thursday. And the funniest part of it all is it's the algos that are tripping over each other. They tripped over each other trying to sell it on Thursday, and then they tripped over each other trying to buy it back on Friday. I mean, you can't make this stuff up. Oil, also added to the excitement, continues to push higher. It rose by as much as 3% during the day to trade as high as $93.15 before settling up only 1.8% or $1.65 a barrel at $91.92. And this caused investors to thrash around as they consider the inflationary pressures that this is going to continue to create. Just wait until it trades at $100 a barrel, which at this point is only days away, because look, $100 is a big round number. It kind of draws it to it. So just watch what happens. At 8:30 then on Friday morning, we got the all-important non-farm payroll report, and it stunned investors in the markets. The government reported a 467,000 increase in new jobs created. Recall that they also told us on Monday that we should expect a very disappointing number due to Omicron. Now, I have to say, I would define these as previous jobs lost, not new jobs created due to the COVID shutdown that are now being reborn. Because we're still 3.5 million jobs below where we were prior to the loss of the 9.4 million jobs in 2020 when the government shut us all down. This all as the economy tries to weather the storm. Employers hiring at a record pace, even as Omicron cases surged in January, and that's a good thing. The unemployment rate rose to 4%, and the labor participation rate rose to 62.2, up from 61.9, which is also positive as it suggests that more people are actually looking for work. The rate, though, remains below where it was pre-pandemic. Wages rose by 5.7% year over year, significantly above last month's rate of 4.9, again suggesting the inflationary pressures continue to push wages higher in what is known as a wage price spiral inflation, an issue I brought up months ago and an issue I was told wasn't happening. This is 2022, not 1979, when the U.S. last experienced an out-of-control wage price spiral environment. Well, boys and girls, guess what? Think again, because it's happening right under your nose. And inflationary momentum continues to gain speed, and we're going to get more clarity on that this week. On Wednesday, the January CPI, Consumer Price Index report, is due out, right? It's expected to be up 0.4% month over month. If you take out food and energy, it's up 0.5%. It's going to be up 7.3% year over year. If you take out food and energy, up 5.9%. All these numbers are higher than they were last month. And then on the 15th, we're going to get the producer price report, which details the prices that producers have to pay to produce the products that they sell. And that report has the potential to register a 10% increase year over year, a number we haven't seen in years. And those price increases usually get passed on to the consumer within a 2 to 3 month lag. So if you think the inflation rate is going down anytime soon, think again. Even if it starts to slow or just level off, it's not happening until sometime in the fall, and I wouldn't be surprised if it continued into the winter. And that is the issue behind what the Fed must do at the March meeting, and possibly before, which no one's talking about. So just to be clear, let's be clear. The Fed can move in any direction, even in a month when they are not meeting, if they deem it necessary to control whatever it is they're trying to control. So while everyone expects a March announcement of 25 basis points, we could get a February announcement of 25 basis points plus a March announcement of 25 basis points, or we could get no February announcement, and then we could get a 50 basis point announcement in March, which is becoming more and more likely, which is why this week's CPI and next week's PPI reports become even more significant for investors to watch out when you're allocating your money, when you're investing, right? If you're the trader type, fine. If you're the long-term investor type, hold on. We're now in the final throes of earnings season, and this week brings us some very popular names. Names like Tyson, Take-Two Interactive, Pfizer, DuPont, Chipotle, CVS, Pepsi, Disney, Mattel, Coca-Cola, Twitter, Cloudflare, Under Armour, Cleveland Cliffs, and Goodyear Tire and Rubber. Over the weekend, like I said, Bank of America came out doubling down on their very aggressive call for the Fed, calling for 7 rate hikes this year, saying that the Fed is so far behind the 8 ball that they can't catch up with 4 or even 5 rate hikes of 25 basis points. And while anything is possible, what they're saying is that the Fed needs to move by 1.75% by the end of the year. So the question is, how do we get there? Is it 7 25 basis point moves, or is it some combination of 2 50 basis point moves and 3 25 basis point moves, et cetera, et cetera? I mean, you get it. Fed funds futures are now pricing in 6 rate hikes. And that's what's going to keep the markets and investors on edge. The other thing is how, as I keep saying, the Fed has lost control of the conversation. They're letting the banks drive it. They're letting the big banks set the tone, and that's a mistake. Jay Powell needs to take back control and tell the markets what to expect rather than letting the big banks drive the conversation. Or is he encouraging the banks to jawbone the markets and do the dirty work for him? Oh, it's all a very tangled web we weave, so don't think you really know what's coming when they change the rules the very next day. This morning, Dow futures are down 75 points. The S&Ps are off 8. The Nasdaq's down 20. The Russell's down 14. European markets have been all over the place. And at 5:30 this morning, they were mostly lower. There's no economic data out today to drive the action, so the focus is going to be on the speculation over the coming CPI and the coming PPI reports and what they're going to say about the next move. So expect to hear so many conflicting commentaries about this. The 10-year Treasury is holding tight at 1.9%. Oil's trading at $91 a barrel. The dollar index is bouncing off support at 95.21. And gold continues to churn right here at $1,811 an ounce. Hasn't really done much over the last couple of weeks. It's been a very tight range. Bitcoin is lifting its head and is now trading at 42,500, while Ethereum is trading at 3,100. So that's good news for crypto investors, as we saw those stocks kind of collapse over the last couple of weeks, those assets. The S&P closed at 4,500, up 23 points, and remains within the 44.40, 45.50 trading range. The long-term trend line is now at 44.45 and remains a key level to watch. I still believe that we have a good shot of testing the January 24th lows of 42.22 before this is over, and Wednesday's report could be the fuse that lights that fire. In any event, what are we having for dinner tonight? Okay, so I'm going to make the grilled ribeye, but this one's got a Gorgonzola cream sauce, which is to die for. So for this, it's simple. You need a bone-in ribeye. You need salt and pepper to start. For the Gorgonzola cream sauce, you need dry vermouth. You need cream cheese, like Philadelphia cream cheese. You need Gorgonzola cheese. You need a bouquet of thyme and rosemary, which means you just wrap it up. And you need black peppercorns crushed, or you can just use crushed black pepper. It's fine. You want to begin, take a small pot, put 2 cups of vermouth in a small pot and bring it to a boil. Add in the thyme and rosemary that's tied in twine, right? Add it, and also add in the pepper. Allow it to bring it to a boil and then reduce by half. Be careful because it'll happen fairly quickly. Now turn the heat down. Take out the thyme and rosemary and add in 2 tablespoons of cream cheese and whisk it around until it melts and it gets all smooth, right? It becomes liquidy. When ready, now add in an equal amount, so 2 tablespoons of the crumbled Gorgonzola. Mix it well. Take it off the heat and let the Gorgonzola just melt slowly into the warmth of the vermouth and the cream cheese. Now take the steaks after you've seasoned them with salt and pepper, throw them on the grill, and cook them as you like, right? Depends on how thick they are. It's going to depend on how long you cook it. When ready, remove the steaks. Slice generously this way at an angle and place on a warm plate. Then take some of the Gorgonzola cream sauce and just drizzle it all on top and present it on the table. You're going to serve this with a large mixed green salad. You can dress this one, make it simple with olive oil and balsamic dressing. Listen, this is also a great sliced steak sandwich, right? You use caramelized onions on a fresh baguette and then use the Gorgonzola cream on top of it and then close it up, slice it in half and eat it. Oh my God, it's so delicious. In any event, it's Monday morning. The day's about to get started. The sun is trying to break out here in South Florida. It was kind of a cloudy, overcast morning driving to work. It felt like it was going to storm. It didn't, though. And now it looks like the sun is trying to break through. So maybe that's an omen. In any event, take good care, and I'll see you in the morning.